Hello and welcome to PolicyCast series. As financial reporting standards continue to evolve, companies are increasingly expected to go beyond compliance and focus on how they communicate their performance story to investors and stakeholders. The introduction of Ind AS 118 marks an important shift in financial statement presentation, bringing greater emphasis on transparency, comparability, and the disclosure of performance measures. Beyond its financial reporting impact, Ind AS 118 will influence how companies articulate their performance, strategy, and value proposition to investors and other stakeholders. To discuss the investor relations and communication implications of this new standard, I am delighted to welcome Meenakshi Sharma, partner at Thornton Bharat. Welcome, Meenakshi. My first question to you is, how does Ind AS 118 impact investor communication and messaging?
Yeah, thanks, Shilpa. And while you've rightly said that, this is another standard which is coming in, which is related to financial reporting, and anything which changes or brings about any improvement in the financial reporting will definitely, impact the investor messaging and communications associated with it. So all my IRO friends and the fraternity are right now a little anxious to understand what it means. How does life change for them, for the investors, in making, the relevant sort of changes to the communication techniques, etc., that have to be done. Ind AS 118 will significantly enhance, the structuring and the clarity which comes out from the financial statements or the information presented there. So, and hence directly influences, how this communication or making sense or making meaning out of the financial reporting, financial information, financial statements happens to the investors. From an IR perspective, I would imagine this would mean companies would need to revisit, their investor messaging to ensure that the alignment is there with the new set of presentations that come in. Matrices, narratives, performance explanations now will have to be consistent with the updated structure, helping investors better understand the drivers of performance and hence enabling more meaningful engagement with the investor community.
That's a great perspective. It highlights that Ind AS 118 is not merely about changing the format of financial statements, but also about ensuring the company's performance and the narrative remains clear, consistent, and aligned with the underlying numbers. This brings us to another area that investors pay close attention to: management-defined performance measures. So, Meenakshi, what does Ind AS 118 mean for MPMs used in investor communication?
Yeah, that's a great question, Shilpa, because we as investor relation professionals have always been using, some kind of management-defined performance measures or sometimes KPIs in that format for our investor-related communications. But now with Ind AS 118, it actually introduces some stricter disclosure requirements around these management-defined performance measures, or MPMs as they are called, because they're widely used in investor presentations, earnings releases, and some discussions along with the investor fraternity. From an IR perspective, of course, this will bring in more transparency and a greater accountability, and companies will need to clarify, define these MPMs, explain their relevance, and the most important thing is to reconcile them with the reported financials. So they'll have to tie them back. This would definitely enhance credibility, that these MPMs bring to the investor community, but will also, bring in or require more discipline in the way, some non-GAAP or adjusted matrices are communicated to the fraternity.
So these are valuable insights. As investors increasingly rely on adjusted and non-GAAP metrics to assess business performance, greater transparency and accountability around these measures can play a significant role in strengthening market confidence. Let's now discuss how investor relation teams can prepare for these changes, and how should IR teams now prepare for these changes in financial statement presentation under Ind AS 118.
Absolutely. As I said, the teams will have to be a little proactive, before the launch date, which is which is right there, I would rather say, the preparations would have to start from today. I think the first and the foremost thing that the IR teams will have to do is to understand the new format, right, of the balance sheet P&L statements, or the income statements rather, on how does the classification into operating, investing, and financing categories will come in. What will it mean for them and their businesses? Also, there'll be requirement for preparation involving and aligning investor presentations, the earnings decks that are used around the corner when, the earnings are disclosed, and some sort of communication materials in the new formats. IR teams would also need to, may try doing some dry runs or internal dry runs to anticipate investor questions coming around that, and then, coordinate with the finance teams to ensure that there is one tone messaging, and the messaging is clear, consistent, and aligned across all external communication. So I think some bit of understanding, and then, a larger bit of alignment with all the spokespersons from an organization for external communities, not only investors and the capital markets communities, but that messaging has to be seamless and has to be consistent across.
So preparation certainly appears to be the key theme here, and the transition will require technical readiness. So Meenakshi, what challenges you see that the IR teams face during the transition to Ind AS 118?
See, if there weren't challenges, you and I would not have been talking about it, right? So
Yes,
definitely
yes.
there are challenges, and they're twofolds, right? One is to first internally understand what is the change, how does it impact business, and then how does it impact the communications that will have to be changed, right? The second
Yeah.
set is kind of aligning the communications across the organization so that there is seamless dissemination of information going around. Apart from that, of course, there is this transition period, right? So managing the investor expectations around that time, and I'm sure some of the people from the investor relations would have started getting these questions: how things going to change in the first place, would there be any change or not, and if there is, what that change would be, and how do you want us to read that, right? So during the transition period, also to manage the investor expectations, and that's happening as we speak, about the historical numbers that may get restated, right? So there's a comparative period also that you will have to work on. So I think that is some expectation management that will have to be done. The changes in the way we present could create confusion or even misinterpretation of trends if that is not properly supported or clearly explained. So that's clearly a task for my fellow IR colleagues. And aligning multiple communication channels, your earnings presentations, your investor presentations, your press releases, analyst calls, all of that would require a very careful coordination to ensure consistency and avoid mixed messaging, right? So the IR teams will need to definitely play a central role in bridging, finance and the internal, their SPOCs, and of course the capital markets fraternity on the other side.
Yeah, so that's a very practical observation. Now, clear and coordinated messaging will therefore be critical during the transition period. So, my next question to you is, how can Ind AS 118 be leveraged to strengthen investor perception and market positioning?
See, if you ask me, as a country, we've come a long way, right? From Ind GAAP to Indian GAAP to Ind AS, and then, we see some new standards coming in. And definitely
Yes.
Ind AS 118 is going to be a milestone. This all is being done so that, we as a country, as an economy, strengthen, and that's going to come around when our financial reportings, etc., are very transparent and is something which can be at par with the best in class at a global level, right? So I think while there are challenges, and of course every new thing kind of brings its own set of challenges, but I think that this again has to be looked at from the lens of a great opportunity as well, right? So if handled strategically, this could definitely be an opportunity for companies to enhance transparency and build that, build on to the stronger or strengthen the investor trust that is there between the organization and the capital markets fraternity. this improved comparability and structured presentation will go a long way in helping investors better assess performance and benchmark companies, and also embolden the trust that is there between them and the organization. Also, I think it's an opportunity to refine the equity story, right? Articulate key performance drivers. So look at your MPMs, which you've been, or your KPIs, which you've been kind of talking around. Now, once you're required to tie them back to the financials, etc., and define them more clearly, maybe this is a time when you need to relook. And if there is some fine tuning, etc., required, probably this is the time you can do that. And also, in the interim, while you are trying to juggle your way through all of this, there are more than many ways to kind of strengthen your engagement with the investor community as well. So, companies that will communicate these changes effectively will, of course, differentiate themselves by way of clarity, consistency, and building up on credibility in the capital markets.
That's quite interesting. Rather than viewing Ind AS 118 purely as a compliance requirement, organizations can use it as an opportunity to strengthen their investment story and reinforce trust with the market. Before we wrap up, let's discuss one final aspect that many companies will be focusing on during implementation. So now, what challenges will companies face in ensuring consistency between financial reporting and investor communication under the new standard?
See, this I think most of the IROs or the IR professionals will agree to this, that while we've talked about the challenges and the opportunities that it brings around, surely any kind of misalignment between the reported numbers and the investor messaging, or the comparable numbers and the investor messaging, can create more confusion. And I think the bigger thing and task is the credibility risk that can come around if there's any miscommunication or something of that kind happening. So I think we organizations and IROs will need to carefully look at the numbers, the way they are presented, what is it coming out of them, talk to the folks that are working around it, and carefully align your investor collaterals, earning releases, presentations, analyst communication, and management commentaries with the revised look of the numbers or revised look of the financial statements, how it comes around. And this would require close coordination between finance teams and the IR teams and others, and robust internal validation processes, clear articulation of changes, especially during the transition phase and when historical data is getting restated. So I think internal arrangements within the organization first, so that credibility and trust could be emboldened with the investor community. I think this will have to be done to ensure consistency between financial reporting and investor communication. And after that, I think we all will be very happy that some new standard has come in, which is bringing in more clarity, and the investors are also looking forward to it.
Absolutely. So throughout this discussion, one message has come through very clearly. Successful implementation of Ind AS 118 will require close collaboration between finance, investor relations, and leadership teams to deliver a unified and consistent message to stakeholders. Thank you so much, Meenakshi, for sharing your insights and helping us understand the broader communication and investor relations impact of Ind AS 118. As we have heard today, the transition of Ind AS 118 is about far more than compliance with a new accounting standard. It presents an opportunity for organizations to enhance transparency, strengthen investor confidence, and ensure that their financial reporting and corporate messaging work hand in hand. Thank you to our listeners for tuning into PolicyCast. See you next week for more conversations decoding the latest developments on tax, regulatory, and policy matters.